Hi, it's Hillel talking to you from my home office. We are about a month into the stay-at-home orders, and the global pandemic is still going on. The United States is hopefully at the crest of the infections, and there's some hope and optimism that in a couple of months, a month or two, that things will start to get back to normal, and that new normal is obviously unknown as unemployment is skyrocketing and the stock and bond markets are still extremely volatile. So it may seem that things are way out of our control, and I'm here to suggest maybe 3 things that you can do to make you feel that you do have a semblance of control during these uncertain times. And that's what I'm going to talk to you about today. The first is tax loss harvesting. The second is rebalancing. And the third is cash flow planning. Tax loss harvesting is a strategy that allows you to intentionally realize the losses and offset those losses in your taxable account against gains and pay taxes on the net amount. The IRS allows you to deduct up to $3,000 of ordinary income, and that also includes dividends and interests. But you can also watch out for the wash sale rule. The IRS will not allow you to realize a loss and then buy back that same holding within 30 days. But if you have excess losses, you can also carry those forward to later years in which you can use those losses. So I suggest that you talk to your tax preparer or financial planner to make sure that you do the work in order to set up a spreadsheet to show you what the net losses might look like and if it makes sense for doing tax loss harvesting. The second thing that I'm going to talk about is rebalancing. The idea of rebalancing is really to take the emotion out of buying low and selling high in your investment portfolio. We all want to buy low and sell high, and in times like this we just don't know what the right thing to do. But it's a reminder that if your portfolio is allocated, and let's say for example you have 60% in stocks and 40% in bonds, and now the stock portion is down to 50% or 55%, in order to sell bonds and buy more stocks at this time will help rebalance, and which also helps to manage the risk on your overall portfolio, because over time stocks outperform bonds, and if you don't rebalance your portfolio, the risk on your portfolio will go up over time. So the other thing to keep in mind is your target allocation may change based on your risk tolerance. As we get older, we may want to take less risk, so that 60% stock and 40% bond portfolio, maybe you want to reduce the risk and by so doing reduce the stock portion of the portfolio to 50%. So that's a combination of things that can be done within rebalancing. Finally, I'm going to talk about cash flow planning, and in my opinion it's probably the most important of these topics. Cash flow planning, and I've put a spreadsheet below in my email, in the body of my email, for a sample client to show you what a cash flow projector might look like. It's broken down into columns: the sources of income, the uses of income, and then your portfolio. So essentially the sources of income, and it's a good idea obviously to diversify your sources of income. During your working years, your earned income will be your primary source of income, that you can use some of the discretionary income to invest into your savings, retirement plans. But you may also have other sources of income down the road. Maybe it could be investment real estate, or maybe it could be farm income. Essentially, the diversification of income is important over the long term. So the other side are the uses of income. So the uses of income is really up to you. It's really your choice, and it really depends on your lifestyle. Uses of income may change, and taking into consideration that our healthcare costs will probably go up over time. So taking inflation into consideration is important, and obviously taxes. And the column on the right is the investment portfolio, and that goes back to the investment asset allocation. The portfolio should be designed to distribute income to you based on needs over the course of retirement. And the goal in the spreadsheet below is in the lower right hand corner that you would never outlive your income, so the portfolio won't go to zero based on the sources and uses of income. So in summary, it might seem that the world is based on what's going on with the coronavirus and the pending recession, the looming recession that we all are anticipating, whether it's going to be a short rebound or something that's longer. These are things that we don't have in our control, but the things that we do have in our control is what I've said, is looking at asset allocation, looking at rebalancing, looking at tax loss harvesting, and obviously retirement or cash flow planning. So until the next time, it's my wish that you stay well, stay home, stay healthy, and let me know if I can be of any service. Thank you.